You want to get better prices for your cryptos and learn how to read the markets to increase your probability of profitable trades. In this video, I have 5 key tips for beginners that are just getting started into crypto trading. If you look at a screen like this and think it's just pure nonsense, then stick with this video to the end because we're going to break it down and use all of this information to become better traders. So the first tip is to use candlestick charts instead of line charts. And if you go on a website like CoinGecko.com, which is really popular and gives loads of great information, they will use line charts like this, which actually don't give us any trading information whatsoever, apart from what some price was at some point in time. If you actually click on Trading View right here, you can get much better and way more in-depth charting analytics with the candlestick charts that you're going to need. Now, I'm going to use Binance for this because this is the trading exchange that I use. If you haven't got an account with Binance, I'll leave the link in the description. You can go through and sign up in a few minutes, and then you can use all these powerful charting and technical analysis techniques. But we're actually going to change this from a line graph. As you can see, it doesn't really give us any information. So we're going to go through to format right here, and then we're going to change this to candlestick chart, and then we can go down, press OK. Now we have a lot more information right here. So let's zoom in, and you can see that each period of time is now a candlestick. So each period of time that is represented is either a green or a red candlestick, red for down and green for up. At the moment, I'm using a 1 day candlestick. You can see that right here, 1 day. So each candlestick is 1 day. Let's change it to 4 hours. You can see each candlestick now is 4 hours in length. This gives us so much more trading information because we know now how each 4 hours is trading. So this 4 hours was green and up, and this 4 hours certainly was down. So the start of the period, this is where the price was at the start because this is the start of the colored in candlestick, as you can see. And then the end of the time period all the way up here. And so that is the end of the colored in part. You can also see these very faint lines around here. Let's just zoom in. You can see these. This is intra time period price movements. What this one tells us right here is that during this time period, the price started here and then finished here. Because it finished higher than it started, that is a green candlestick. But during that time period, the price actually moved all the way down to here. This gives me as a trader so much information. It tells me that sellers were coming in. You can see sellers here. This is red candlesticks. Then the price started right here. And actually sellers came in really and pushed the price of the cryptocurrency down to here. But during that same time period, buyers came in and moved the price all the way back up, actually into positive territory for that time period. As a trader then, I know that during this short time period, buyers are coming into the market. And so I could actually say, well, if there are buyers in this time period, they may follow on into the next time period as well. And that actually happened. So if I timed a trade on this candlestick, I would have actually made money of this candlestick if I'd have traded that time period, or if I'd have actually held it for even longer, would have moved all the way up here. And then obviously you can start trading in different ways and using different techniques to try and time your trades. But using candlesticks is so much better than using a line graph like this, which has no trading information at all. Next tip is to use limit orders when you trade cryptos. Limit orders are a vital tool for professionals and they'll save you money in the long run compared to just taking prices. We can come down here and we can see the price of Bitcoin right now, 55,168. So what I can do is actually go through and hit a market order. What is that going to do? Well, I cannot choose the price that I trade at. What that means is that the best price that I will get is this price right here. You can see 55,180. This price right here is always higher than this price right here, which is the best bid. When I'm a buyer and I'm buying on a market order, I will be taking someone's order away. So this is actually a seller right here. This is somebody with Bitcoin who wants to sell, and they're offering me Bitcoin at a high price. And if I choose a market order, I'll be buying that order and paying a higher price. What I want to do though is switch over to a limit order, and then right down here, I can join bidders. So I'm actually putting my order out to the market and saying, I'm willing to pay a specific price. And if you're a seller, then you can come and hit me and I will get your Bitcoin. Not only do you benefit from not paying the offer, but actually bidding and getting a lower price, there are many benefits as well. So let's come down. You can see the price now is 55,266. Well, let's say I want to put an order in at 55,250. I can actually then put that buy order in And it's gonna sit in the market somewhere down around here, and it might get hit. But what I can also do is put in multiple limit orders. I can put a limit order in at 55,000 like this. Then I can put another order in at 54,500. And I can come down on the order book right here, and I can just put in limit orders. One here, one here, one here, one here. And what that will do is if the price does move down and I'm a buyer and I'm willing to buy it and go long, then I will get a much better average price. It's a lot easier for me to do this rather than just saying I'm gonna buy $1,000 or $10,000. I'm just gonna do it all in one go and then get one price. You wanna try and split your orders and put limit orders in. It's the same with take profit prices, and it's the exact opposite as well. So not so much if you're a long-term investor, but if you're a day trader, you'll come over to sell and you can put those limit orders in. So say you maybe want to sell some here, some up at 57.5, some up at 58.5, some up at 59. So you can do that and really just ratchet your trades. And then you get average prices. So you don't trade all at one time, and you can really surround your trade at different levels. So you get better average prices. Another type of limit order that a lot of day traders use, not so much investors that just want to go long and hold, but day traders will use stop losses. And this is a way to mitigate your risk. So let's say you're day trading and you see the price come down to here and you think, hey, this is actually quite a good buying opportunity and I hope that it bounces up. I can buy in around 61 and then I want to hope to maybe sell at 63 and make some quick money. Well, you need to put in a stop loss order to mitigate your risk. And this is a great example of it because Bitcoin had what, 10 to 15%, maybe 20% sell off. You can see this big move down. Now, if you got in here and you wanted to make some quick money, but you didn't have a stop loss, you didn't have any insurance, you would have obviously come down here and you would be in the red. It would be a pretty bad trade. But if you'd put a stop loss in, so we can do that now, we can come over to stop limit like this. Maybe let's say 59,500 and we'll match this as well, 59,500. What this is telling the system to do is that if the price of Bitcoin gets down to 59,500, put a limit order in for you and sell your Bitcoin. Now you're going to be making a loss from this trade. You would have got in around 61 or 60, 60 and a half, and then sold at 59 and a half. You would have made a loss, but you would have been stopped out, meaning your loss would have stopped. So yeah, you did make a small loss, but then obviously look at this big loss that you would have had. So that stop loss mitigates some risk and lets you know how much risk you're taking in the trade and what your loss is limited at before you trade. Next up, I want to go a bit deeper into using stop loss orders because it's really easy to say, oh yeah, just use a stop loss and you'll have some insurance against big losses, which is true, but it doesn't take into account the nuance of each trader and each trade. Coming back to the Bitcoin chart then, certainly you don't want to put your stop losses too close to the market. Otherwise, you're going to get stopped out a lot and basically you'll just make a lot of little losses. You never let your trades run. It's also a bad thing. So there's a lot of nuance in this. And it sometimes can be very difficult to choose where to put your stop losses and your limits, but this is the art of trading, and this is what every trader basically never perfects in his life. But you can see that, let's say you actually went long around here, you thought the price had pulled back a bit, and you think, yeah, I want to go long here, so you go into a long trade, but you have a stop loss around this level here. So I'm just going to draw that on the chart for you. Let's say we got in at this price, and then we had a stop loss at the bottom of this. So we had a 3% stop loss. So we know we can only lose 3%. We would have got in around this level and then we would have had a sell off as well. And you can see the price actually moved below this level right down to here. So we would have been stopped out and we would have lost 3%. But if we just had a stop loss a little bit lower and we'd actually been able to take more risk, so we would have actually been taking around a 6% risk. For that 6% risk, we wouldn't have actually lost. We would have not been stopped out, and then we would have made this huge amount, which was an 11% gain. So the drawback of stop losses definitely are, it's difficult really with them because if you do get stopped out, then when do you get back in? If you're going long, you get stopped out, and maybe the price moves back up again, you're starting to buy in higher than you got stopped out at, or even entered the trade at in the first place. So it can limit your risk, but it can also stop you out of positions and stop potential upsides if the trade is still running. Next up, you might want to use some really simple indicators so that you can time your entries properly. Something like the RSI can improve your chances of getting in at more profitable times. There's risk in every trade, of course, but having a strategy to enter is better than just blindly buying in when you have some cash. Now we can see the RSI. Now this is relative strength index and it's really easy to read. Basically anything around 30 And sometimes with Bitcoin around 40 or even a bit higher is considered oversold. And that just means that the price is pulling back towards some support, and you may look to enter at these times to go long when the RSI is very high, maybe 50, 60, 70, as you can see up here. These are called overbought positions. So this is when the price is going high, much higher than it has been relatively. And so it's a very high price comparatively to the average prices going back over time. But this is a relative index, so relative strength comparatively. So I've just changed to the 1-day chart, as you can see, to make it a little bit easier to see. So when the RSI is very high, these are times where you may want to actually consider if it's a good time to buy or not. So you can see the RSI is very high right here. The RSI is very high right here, and it's definitely high around here. It's no coincidence that the RSI being very high just happens to match up with highs in the Bitcoin chart. So we can see these highs that are coming on, and you can see all of these highs right here. This is when the RSI is extremely high and is telling us that the cryptocurrency is overbought or its relative strength is way, way high. If you're an investor and you want to accumulate Bitcoin, then obviously you're looking at this and thinking, these are not the times to be buying in. We can therefore look at the RSI once more and say if the RSI is oversold at these times, 1 and 2, 3, and also once more this fourth one. If you're a long-term bull and you want to accumulate, it just so happens that these do really match up very well with periods where the price is coming way back. So if you're a long-term bull, which one of these would you want to be buying in at? Would you want to be buying on FOMO and hype up at these levels? Or would you want to be buying when the RSI is in oversold territory and getting comparatively cheap Bitcoin? Next tip is to identify breakouts and pullbacks, and something that's called the first pullback, that's if the price is going up, or also called the first rally when the price falls a long way and then starts to go up again. This is such a classic price action on breakouts, and I've seen it time and time again when trading. It's quite predictable and you can try to take advantage of it. We can once again use today's moves in Bitcoin to illustrate the point. So let's come over to the 4-hour chart. Like I said, we had that big sell-off right here. So you can see what happened is that there was a very big sell-off over a period of time. So it went from this price all the way down to this price right here, and then it moves back up again into this green position. So if you were looking at Bitcoin and you're seeing that the price fell off so much like this, and then you had this big surge of buyers come in, and then the next time period you had a move up, and you're thinking, oh, this is great. We had the sell-off, but now the rally is coming. It's going to move higher again. It's going to get back up to, these price levels. This is such a typical trading pattern that I see, and I see it so often. I've seen it in stocks when I was trading them, and you can see it in Forex, and cryptocurrencies are no different. It's called the first pullback or the first rally. So what happens is you get a massive move like this, and then obviously a rally. So a big sell-off, and then buyers come in. But there is more often than not a second round of selling. So this is to the sell side. Now it also happens to the buy side as well if it's breaking out upwards. This is breaking out downwards. You have buyers come in, but then look at the next candlestick. It's down once more and it's lower than this. This is absolutely classic. It's like the second go at a sell-off. This happens so often, and a lot of traders that would have bought in around this price right here at 56 would have got burned and made losing positions. But it happens so often that you get a big move down, a small move up, and then it actually moves down once more before trading starts trying to level out again. To try and get better profitability from your trades when a big move happens like this and then the move up, you may think, oh, I want to catch the move that's going up. Just actually wait this out and see if the second bite at the cherry comes in, moves it down again, and then you would get in maybe around this price. So instead of paying up and maybe buying at 55, you may have an opportunity during the second time period and the second bite actually getting in at around 53. So that just increases your probability of making a profitable trade if you're day trading. Now, if you're investing, it doesn't really matter too much. You might just want to put in some limit orders around this price, get hit, buy some, and then just wait for the time period that you want to hold Bitcoin or the other cryptos. Trading is massively complex and technical analysis, and all of this Obviously, it's just a guide and cannot tell you exactly. That is why traders still go to work every day. If you want to trade on Binance though, I'll leave the link in the description for you. And you can get $40 of free Bitcoin with Celsius wallet. I use Celsius to earn passive income on my Bitcoin and other cryptos. You get $40 free if you use my code. I'll leave that in the description when you download the Celsius wallet app. Thank you so much for watching. Subscribe for daily helpful crypto content, and I'll see you in the next one.